Britain's political leaders will resume campaigning tomorrow after a three-day break with an enhanced police and military presence on the streets. We're 2 weeks away from the June the 8th general election, and remember, Brexit negotiations are set to start in less than a month. One company with a Brexit insurance policy already in place in the form of a new Brussels office is Lloyd's. With us for an exclusive interview during City Week is Inga Beale, CEO of Lloyd's. Good morning.
Morning.
So your plans are progressing. You're already starting to think about what Brexit is going to look like. The city is already thinking about it as well. In some ways, you're already ahead of the curve. How are your plans progressing, and how do you think more broadly the city is now set up as we go into these negotiations?
Yeah, so we've chosen to set up a subsidiary in Brussels, and that means that we can secure continuous insurance cover for all our customers in the continent. Or on the continent. So that's progressing, and now we've just got to go through the actual physical setup of the office, hire the people who are going to man the office, and that's all progressing fine. And that affects about 5% of Lloyd's overall revenues. So it's not a massive amount of business, but about 5% is going to have to flow through that subsidiary. But then it all comes straight back to London. Yep. So when we look at the overall impact of London, the City of London, and how we'll still continue to contribute, nothing actually changes at the end of the day. It's just the mechanism by which we have to get that business into London. Bit more cost and a bit of a less streamlined approach.
OK, so it sounds quite straightforward, but my question kind of off the back of this is, how much time have you spent, are you spending thinking about this? How much of a distraction is this from what actually you consider to be the kind of the raison d'etre of the business?
Yeah, well, because we're in the risk business, of course, we were planning, even before the referendum. We had to have our contingency plan ready. But fundamentally, after the referendum vote, we had to start thinking about seriously what we were going to do. Now, that was incredibly distracting. We had to put a bunch of resources onto it. And I think importantly, it meant that we had to take some of those resources off other perhaps new markets we were looking at, new ideas, some innovation. We've had to just park for a bit. But now that we've announced what we're actually going to do, we're into implementing, and therefore we can bring those resources back to looking at the new stuff again. But we did have a bit of a gap where we couldn't invest all of those resources and time into some of the new stuff.
Does that mean you have resources to invest now into new businesses? I mean, are you looking to expand by way of buying, small startup or fintech businesses?
Well, Lloyd's is quite unique because we're a market. We're an insurance market made up of over 50 individual insurance players, and therefore we don't actually make acquisitions per se, but I can tell you we're looking very closely at what we need to do in terms of what the fintech or insurtech, as we call them, what they might be doing, how they might disrupt our market. So we're looking at that, but it won't necessarily be an acquisition because we're actually a market. But what we are also doing is looking at other parts of the world and where we're seeing growth. So, for instance, Asia for us, we can see that 60% of growth is happening in Asia at the moment, and we've been investing in that part of the world over the years, and we'll continue now to look at that and see what other markets are going to be attractive for us in that part of the world.
So I know a little bit of the history of Lloyd's and the names, and it's a fascinating marketplace. Obviously, Asia was a big part of the beginning of this company, this group. Where do you see getting your revenue from now? I mean, where do you see the revenue breakdown from, say, in 2 years, 5 years?
Yeah, well, we do see it shifting. If you think about some forecasts are saying that Asia will have 45% of global GDP in the region by 2025. So that's really why we've been focusing on that. And I've recently come back from Latin America, because that's another area where we've been having some great growth from 2010 to 2015 over that period. Places like Mexico, Colombia, we saw 25–30% growth for Lloyd's. And we do see vast opportunities in those parts of the world because of the underinsurance that's going on. So if you go, say, to some of these countries, their insurance penetration is probably well under half of what the global average is. So great opportunity for us to go in, offer the specialist insurance products that we do, and particularly when governments are investing in infrastructure, they've got big construction projects underway, things like the Chinese initiative, the Belt and Road Initiative, we anticipate being able to offer insurance for a lot of that. So that's where we see some of the growth in the future. So while the US is by far our biggest and most important market, well over 40% of our business currently comes from the US, we do see some of those other new emerging markets being a bigger and more important element of our portfolio in the future.
Final question. One area where government may have underinvested is in cyber. We just had the WannaCry incident. Data breach insurance is already, it's an area you've been focusing on for quite some time. Have you seen a pickup in interest as a result of what has just happened?
Not that immediate since the last weekend,
right,
but we've definitely seen a pickup. Now, there are a few things driving that. First of all, in the US, which is the major buyer of that type of insurance at the moment, the government wanted all breaches reported. Now, in Europe, we're already seeing now a similar uptick because the new data regulation that's coming out next year.
Yeah.
And that means that there will be fines on businesses if they haven't handled data breaches appropriately. That means that's put it on the board agenda. That means the chairs, all the board directors looking at it very closely, and they're wanting to now protect themselves.